I think you have to take that at face value that we're probably more half full than more half empty.
Hi again, everybody. Thank you for joining us here on the Comstock channel. Always a treat to get to visit with you about our ag commodity markets. Today is no different at all. We're going to talk about the recent corn harvest progress numbers that came out from USDA, along with the soybean harvest numbers. So now we'll see how deep we're getting into that part of the season. And we'll talk about that in just a second. Make sure you like these videos and also subscribe to the videos by clicking on that bell icon down below, and then share these videos with others too. And thanks to your help, we continue to grow our channel. Well, today I'm joined by Justin McKinney of Comstock Investments. We're going to talk about the latest USDA numbers for the harvest progress. And Justin, thanks for coming on board here to talk about this. It looks like so far, overall, we're running ahead of schedule if you compare it to the 5-year average, right?
Yeah, here we go. Just slightly better than the 5-year average. Came in at 14% on the corn. Last year, 13%. 5-year average at 11%. So where that puts us, we have some pockets that have been pretty dry, ready to roll. Ohio was a number that kind of jumped out. We were talking about that before we recorded. Things like that. So the drier it is, we obviously haven't had any rain delays lately, other than over the weekend, just slightly. I would expect that number to grow exponentially this week as we move forward on corn and beans, but especially on the beans. There's quite a few beans that are just starting to turn and ready to see a combine hit them.
Are you getting any early harvest results from your clients or not?
I am a few incredibly variable. We've had some guys say that they're better than what they thought they were going to be, worse than what they thought they were going to be. But as a general rule, really variable and not a huge geographic footprint that they're that variable at up here in Minnesota. So it leads me to question, where we're going to end up as a state on Minnesota for the beans. But at the end of the day, we are hearing some decent yields come out of Iowa. Southwest Iowa in particular is doing really well right now. So, by the time we get up here, is it really going to matter? It's probably more a function of whatever happens in South America when we look at price direction. In the midst of well-documented 30-year drought, forecast hasn't been for much rain, but not concerning for me. They can plant beans for a significant period of time. It may end up affecting your second crop corn. If we get too late to plant that, who knows? Probably a little bit of risk needs to, or price risk there yet, whether or not they get that corn planted. But when I look at the soybean market, it's sure fun to get bullish. We have seen an 85, 90 cent rally. But if the rain starts amounting to anything down in South America, I would tend to believe that market's going to set back.
You and I have talked before about the fact that I live in, I guess you would call it, between the Tennessee Valley and the Ohio Valley. We call it the MidSouth in Tennessee and Kentucky in this region here. And well, I tell you what, yesterday, we're down to just a handful of cornfields left. I can't believe how fast they knocked it out. And one of those few remaining fields was taken out last night. Now, the cold front is finally coming through this region, and we're finally getting some rain. It's been extremely dry here for, about a month and a half. But they're making a lot of progress. And you were talking about how the markets are acting with harvest running ahead of schedule. But is that going to keep a lid on things here for a little while, do you think?
I guess when we look at so much of that corn in your area, Marlin, is probably moving to the southeast, the hog feeders down that direction. Those pipelines are pretty tight. Not a great crop down there this year. So I don't know if it's going to keep, per se, a lid on it. We also have to look at, we do have a hurricane coming, which is very bad for the people who live in Florida or in the path of it, which I happened to be there last weekend at my sister's house. So that happens to be very bad, but maybe we will get some water into the Mississippi and pick up those water levels to be able to get the shipping back going. So I don't think anybody really knows yet what's going to happen. We've seen those Ohio Valley region markets. A lot of grain gets shipped right off the combine in the lower Mississippi as well. So, so far China has stepped up and been purchasers. They are going on holiday. So I wouldn't expect a lot out of them in the next, week or so. But they have been stepped up, made really good export purchases last week. Hopefully we can keep that going into October so we can get this harvest moving along and the beans that are not going to get stored find a home for them.
Well, you referenced Hurricane Helene. That's what it's going to be called here. And it's going to be heading into the southeast. It'll go through, they think, the Florida Panhandle and then veer off to the north and then northwest. Kind of an interesting track on this particular one. A lot of heavy rain is expected in the southeast. Now, they grow a lot of corn in the southeast, but I have a feeling it's probably mainly all out of there. I just wondered if you thought this had much to do with supporting the soybeans. You talked about how strong they have been lately. Is that just kind of adding like one little layer of support to the soybean market right now?
It could, but in my mind, a huge percentage of this is short covering on the Brazilian weather and possibly a little bit concern on how big this crop actually is in the United States. But the bulk of the chatter on the wires has been about the Brazilian weather. And also overnight, we had China change some banking regulations. They don't have to keep as much cash back on some loans, loosen up a little bit of money. That got everything really fired up. I think I started writing the report at 3:30 this morning. Beans were off a penny or two. By the time we kicked kick off the day session, we were significantly higher. We went up and traded 1058, which took out two of our sales targets that we put out. We had a 1043 recommendation on 10% of the crop and another 20% sale at 1053. So assuming you got your Comstock report and called those in before the market moved up this morning, we got a bunch of beans sold. We're going to take advantage of this rally. Just think that if that weather does change or something in China changes, that we could see a little bit of downside harvest pressure. Yeah.
So there again, one of the advantages of subscribing to the premium content there, and again, just a reminder, everybody can do that for a month for just $1, and especially this time of year. I mean, you can't even put a price tag on the value of that information right now. So yeah, that's a good case right there. The wheat market, let's see. I'm looking at how we closed in the wheat. It didn't look very exciting today here on a Tuesday. What's the problem?
Russia's still selling cheap wheat. We continue to debate how hurt the crop is in Australia. Up to possibly 25% of the wheat growing area is affected by drought. Possibly as high as 50% in the Black Sea region, but Russia's still putting cheap wheat out on the market. So we've been trading step for step with those Paris wheat futures, and they've kind of backed off recently here. So with that, there goes our United States market. Exports have been fairly good on the wheat, which has been, long time since I can remember that being the case in the United States wheat, but they have been pretty good. I would suspect it will continue to get some sales. We'll continue to move that wheat. Sooner or later, the Russian problem or the Black Sea problem is going to spill over, and we'll be the benefactors of that wheat.
Let's look at livestock here. Fairly positive close at the end of the day. I see a lot of plus signs there, but it wasn't anything overly dramatic either. How do you read that? Is it half full or half empty on that glass?
Well, first off, on the cattle, I think you have to take that at face value that we're probably more half full than more half empty. We saw cash cattle trade significantly, a couple of bucks higher last week. A lot of people talking about overs, packers coming in bidding, $1.83 plus $1 premium. So it gets reported at $1.83. Affecting the AMS national average, but yet they're getting paid premiums over it. So you have to look at the cash market and be relatively optimistic. Boxes traded back up over 300. We closed, or midday cutoff values were 302.79 on the choice and 288.56 on the select. So we are putting a little bit of value back on those boxes. Positive sign. The two caution signs are the size of these cattle that we're harvesting, 25 to 30 pounds heavier. Packer margins running in the red. We really need to see those boxes move another leg higher, probably closer to that 309, 310, before I would say the glass is full. But we have approximately the same number of cattle on feed for the fourth quarter this year as we had last year. yeah, we still continue to run those heavy weights. Moving forward, there's kind of a gray area to your question, but it feels like the cash market will probably be relatively firm this week and should support the futures.
Well, you look at the live cattle, the feeder cattle, and the lean hogs on all of their charts. If you look at the October contract, I mean, they've had a pretty good run now. Do you consider them to be just a little overheated for the time being, that it's getting kind of toppy, or not?
I do in the hogs. We have a quarterly hogs report out on Thursday here. Estimates are for 100.2 all hogs. Breeding was 97.9, and for marketing 100.4. So while those numbers aren't huge, we have had a pretty good run in the hogs. We continue to kill above a year ago levels. Well, actually, last week we dropped back to more normal towards a year ago levels, but those hogs have just kind of had a really nice move. I put it out in the Comstock report, even though it feels like cattle maybe have found some footing here. We're within a couple dollars of some resistance points. It could be time for you to get a hold of your Comstock broker, or however you choose to hedge your products off, and at least start taking a look at some risk management on both those cattle and hogs.
So harvest is well underway, as evidenced by USDA's weekly report there. And we have the hurricane heading inland here over the next few days. I just wondered, when you look at the grain charts here, we're kind of in no man's land, aren't we, when it comes to marketing the new crop here?
Especially on the corn. We just keep going down to that real close to $4 levels, not being able to penetrate that on the downside. But yet we can't get over today we put a high in at 418, had a really nice up move right off the bat following the soybeans. We're unable to sustain it, ended up closing down $0.0175 for the day. You flip that over to the soybean side. We did go up, fill some chart gaps, hit some technical, targets that we were looking at to make some sales, but ultimately basically failed at that too. We ended up positive 3 cents for the day. But, when you look at that market and you're 16 off of the high, it doesn't get you really excited, or all that warm, fuzzy feeling inside.
I know I was driving home a couple of nights ago, and we have a fairly sizable terminal not too far from where I live, and semi trucks in the evening were lined up about a quarter of a mile to the highway from that terminal. They were waiting to unload, and I have a hard time believing that basis is going to hold very strong in conditions like that,
especially in the east of the Mississippi. We've talked about this numerous times in the Comstock report, the variance in the basis in the east versus the west. It's broken in the east. It could continue to break a little bit more with those long lines. The west, we've had really firm numbers the last 2 years, where I would assume that most of that grain has moved into the market. And we did have, pockets of prevent plant west of the Mississippi, northwest of Iowa, western Minnesota. That should put a floor on those basis bids. Not saying we can't work a little bit wider, especially on the beans. If we don't continue to see Chinese purchasing of those October beans, we could leak a little bit wider on those beans. But west of the Mississippi River, it feels pretty decent to firm. East of the Mississippi, we're probably going to try to put it in storage and wait for some sort of better baseless appreciation.
Well, I know as a former grain merchandiser yourself, when I listen to you talk, a lot of times I hear you mention how you like to watch the carry in the markets. What is that carry telling you right now?
Well, we look at that Dees March went out to 19 cents today. That's pretty decent carry. With interest cost and labor and all those things, those costs have crept up a little bit. So that carry needs to widen out to offset that. But, generally the more carry the Board of Trade is willing to give you, the more comfortable they are with the crop size. Today we saw, that December to March corn spread, we leak out about 3/4 of a penny wider. Tells me they're getting a little bit more comfortable with what's at least in the east part of the belt. You flip that over to the soybeans. We really haven't done a whole lot there. We're sitting tight on that, just seeing what weather amounts to in South America.
Sometimes you can actually get an inverted market, and that tells you they want it right now.
That's right. And at that point, with the carryout numbers that we're looking at, with the yield numbers that they're forecasting. Regardless what your bias is of the board price, I would be a seller of soybeans then and taking advantage of that. I just don't see that inverse coming this year. But if we do snug that carry up in your area, either on a cash push from a processor or on somehow the board pulling in some, I would take advantage of that and move some soybeans.
Awesome information. You mentioned that you are one of the contributors on our premium content that the newsletter comes out in the morning on that for the first edition. What time of day are we looking at? When does that normally hit the wire?
Usually by 7 a.m. we try to have that out in the inbox for very shortly after. And I will put out, Marlin, we have changed the formatting on that just slightly. We do have a video component to that now. So I know that maybe reading 2 pages of newsletter isn't in everybody's time schedule right now. But for the subscribers, you can click on the video, take a listen, follow along. It's a little bit of a condensed version of the written. Something sparks your interest, go down, take a look at the written report. But this time of year, if you got 5 to 8 minutes, it's not a bad idea to take a look at that.
Yeah, lots of tons of information in there that's very critical each and every morning. All right. Well, thanks for all the work you do on that. I can't believe you get up that early, and hopefully someday you'll get
Not
some
always
rest.
on purpose, but that's
Justin, thanks so much, and I'll talk to you again soon. Justin McKinney with us today. He's with Comstock Investments, and that'll do it for producer Brianne Hendrickson. I'm Marlin Bohling, and we'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.